Next up, we have Ms. Winnie Guo, who joined Pengyuan International as Director Corporate Ratings. This year, she is responsible for covering the non-financial institution sector. She has over 10 years of experience covering various industries, including property, engineering and construction, infrastructure, and transportation. Before joining Pengyuan, Winnie was a credit analyst at Fitch, where she spent 3 years in the corporate team as an associate director. She will talk to you about new economics, diverging corporate credit trends in China. Let's have a round for Winnie.
Okay. Good morning, everyone. My name is Winnie, and I'm going to discuss about the corporate section, which include an overview, the defaults, and also the recovery. So 2017 was a record-breaking year for China offshore corporate bond issuance. The total issuance was more than doubled. Property, which was the key driver, up more than 3/4. This is demonstrated by the chart here. The chart is the issuance by year, here breaking down into different industry. The gray bar here is property. So we can see that property has been dominating the issuance in the past few years. This chart here is showing the breaking down into the different rating category. The gray bar here is the non-rated. Blue bar is the investment grade, and the red bar is the high yield. It's worth to note that the non-rated bond also had a quite significant increase, most of which had a high yield profile by our observation. 47% of the non-rated bond was property. So these two charts are showing industry breakdown for the different rating category. The left-hand side chart is for the IG investment grade, and the right-hand side chart is for the high yield. So we can see that while the investment grade has a quite diversified industry breakdown, high yield was mostly just a property. So in 2018, we expect that the bond issuance in the offshore market will continuously to go up, with property still be the key driver in the short term. However, in the long term, we do expect the non-property issuers will come in to the offshore market to issue bond. Actually, by our observation, in the past 2 years, we have seen many property issuance was for the many property issuance was for the refinancing purpose, while the many non-property sectors have first-time issuers. While offshore market has surged, we are seeing onshore market issuance has declined by 36%, and high yield had a wider decline. So nevertheless, onshore market still remain as the key financing channel for the corporate bonds, and it is 5 times of the offshore market measured by the total outstanding. So the right-hand side chart is showing an industry breakdown for both IG and high yield. The left-hand side bar is the IG, and the right-hand side bar is high yield. So we can see that the onshore market has a much better industry diversification. So as we said, with the developing of the offshore market, we are going to see a better and improving industry diversification, with that getting close to that of the onshore market. So what has been the driver behind the divergent trend of the onshore and offshore issuance? The yield. The two charts here are showing the yield spread between the property versus non-property, and also the onshore high yield versus the offshore high yield. The left-hand side chart is showing the property, offshore property versus the offshore non-property bond yield. So the gray shadows here are the yield spread. We can see the yield spread has been narrowed. So in other words, it's getting cheaper for the high yield, especially the property companies, to come to offshore to issue bond. with the yield spread, and which is the risk premium that the investors are requesting for having a high yield declining, it's time for us to revisit the risk, which is default. So we have been talking about the default in China. Default, how bad it is. Default in the past 4 years in both onshore and offshore market has been below 0.3% measured by the default ratio. So let me put this number into a bigger picture. Globally, in the past 20 years, the average default ratio was about 1.6%, with 4% during the crisis. So 0.3% default ratio actually is fairly low in China. If we look at the two bar charts here, it shows the default by the dollar amount and the default ratio in the past 4 years. So we can see there is an upsurge in 2016, which was driven by the SOE reform and also the supply side reform pushed by the government. So with the oversupply issue getting eased in China and the corporate profitability is getting improving, we are expecting default ratio is going to remain low in 2018. However, any emerging of the new defaults might damp the market sentiments as the market has been yield seeking and any individual credit risk hasn't been fully priced in. So who has defaulted? We did a study over the past years, all the defaulted issuers, both onshore and offshore. The double ring chart here is showing the industry breakdown for both onshore and offshore default. So basically, if you look at the onshore industries, manufacture, E&C, and metals mining, and also consumer are the top industries that have seen the highest defaults. And E&C properties and manufacturers are seeing the highest defaults in the offshore market. We also examined the bad loan ratio at the big 3 banks in China, which is showed by the bar chart here. So although it is not exact the same thing that we are talking about the defaults here, it does show where is the default at the higher tier debt holder. So basically the result is quite similar to what we have for the onshore defaults. Consumer manufacturers and metals minings have seen the highest bad loan ratio in 2015 and 16. So what has been the driver for the default? From top-down perspective, we think it's the policy. Before 2014, the defaults were rarely seen in China as the corporate debt has been backstopped by the government implicit guarantee. However, in 2016, we are seeing a spike of the defaults, which was driven by the SOE and also the supply side reform. So what we have for 2018, what do we have for this year now? We do believe the government theme for this year is continues to be the deleveraging and the financial stability. Translating that into a bond market language, deleveraging means that we are definitely going to see certain level of defaults. Well, financial stability means that the governments want to push the default in a more sensible way, which means the authorities is likely to have the default under control, with the casualties coming from the weaker and the smaller players in the high leverage and overcapacity industry. From the bottom-up perspective, company financials, corporate governance, and also the shareholder structures are the 3 drivers behind the defaults. I wouldn't emphasize too much on the top 2 because it's usually mostly being able to be covered by the credit rating also can be reflected by the market consensus. Well, from time to time, we find that a fragmented shareholder structure could leave a hazard for management disputes or the hostile acquisition, and which lead to a change of control and eventually might trigger a default or near default cases. This is very typical among the privatized SOE that restructured by the management buyout during 1990s. So such company tends to have a very high quality management, long track record, good market presence, but a fragmented shareholder structure which live as a legacy. So this is what we want to highlight here, because sometimes it's not being able to capture by the rating and might surprise the market from the downside. So what's next? Where is the risk now? We analyzed the credit ratios for the 3,500 A-share listed companies. The three bar charts here are showing the EBITDA margin, leverage, and the coverage for the whole corporate sector. We can see that in 2017, margin has improved mildly, with the leverage declined and the coverage improved. So to look at the credit metrics for each different sector, we try to combine the different credit metrics into one chart. This chart is showing the EBITDA margin versus the gross debt to EBITDA. So the horizontal axis is the leverage, and the vertical axis is the margin. So the industries that showed on the right corner tends to have a lower margin versus higher leverage, which is more riskier than the industries on the left top. So we also show the past 3 years credit matrix changes, movements by the direction of the arrow. So the blue one is margin and the red one is leverage. So if we see a double up arrow, such as for metals mining, it means the margin has improved while the leverage has come down. So in specific, property sector has been under pressure with a higher leverage versus a lower margin in the past 3 years. Consumer, engineering, construction, and also manufacturers, they tend to have weak credit profile. However, the financial performance were stable in the past 3 years. Metals mining and oil gas improved on the back of a better supply-demand dynamics and also a higher commodity price. These two charts, the charts on the left-hand side is showing the EBITDA coverage versus the leverage. So the vertical axis is the coverage, which is revert here. So the industries plotted on the right top has lower coverage versus higher leverage, therefore a riskier compared to the company on the right on the left corner. The chart next to it shows the yield, which is the onshore bond yield we are using here, and also versus the leverage. So here what we want to say is the vertical axis is how much the investors are paying for, and also the versus how much is the risk, which is on the horizontal axis, simply measured by the leverage here. So in face of a default, how much we can expect to recover? So in the past 4 years, the average recovery ratio was 20% for the onshore versus 34% for the offshore. The offshore has a relatively higher recovery ratio. This could be because of a smaller sample and lack of evidence. It also could be because of the higher percentage in the offshore of the DDE, which tends not to be allowed by the local banks. However, such an average ratio is not really a good representation, as the distribution of such recovery is by model. If you look at the two bar chart on the left-hand side, it shows the recovery ratios distribution. We can see that in face of a default, we are either getting very little recovered, or we get almost nearly fully recovered. Here we also showed a chart which is on the right-hand side, the red bar chart. It shows that a survey done by China Orient Asset Management, which is a distressed asset management company in China. Basically, around 34% of their PM is seeing around 20 to 30% recovery ratio for the asset under their management, and another 35% AMs are seeing 30 to 40% recovery ratio. So overall, we think 20 to 30% recovery ratio in China's estimates is quite reasonable. Such ratio is much lower than the developed countries such as US and Europe's around 40 to 50%. However, by saying that, we think it's very hard to forecast the recovery ratio, and such forecast doesn't really have too much meaning. As I said, the distribution is not normal. So to wrap up, we do think China government will continue to push the deleverage and also the supply side reform. That will be mitigated by the improving corporate financials. The new issuance in the offshore will continuously to grow in 2018, with the default ratio will remain low. We do think a certain level of defaults will help to cultivate a healthier market, as it will urge the regulator to improve the regulations, and also the market efficiency will also improve. So the property sector has a higher risk compared with all the other industries, with the unfavorable market condition and the deteriorating financials. All said, China accounts for 60 to 70% of Asia US dollar bonds new supply, and it's 50% if you measure by the total outstanding. So China's onshore and offshore bond market has lower volatility versus a very good liquidity comparable with most developed and developing countries. Yes, there is a risk here, but there is also an opportunity. That's it from my presentation.
Well, great. Thanks, Winnie. Well, if you have sat through this morning session, if you remember the topics that were discussed, we had sat through sessions on LGFVs. We have gone through the prospects for banks and FIs. Now, looking across the room, actually, most of the CIOs we have in the room, they trade offshore. And if you're thinking what I'm thinking, the question I actually want to ask would be on, well, the hottest sectors that's been doing all the leverage deals offshore, that's been basically, pushing all the issuances for the past 5 years. Now, the question for you, Winnie, do you expect defaults in the property sector in 2018? So far, we haven't seen any. Now, if you do think, there would be a deterioration in the property's financials, what would be the likely cause of that?
We are seeing for the whole sector, we are seeing the leverage was going up in the 2017 with the higher land acquisition versus a slower contracted sales. As a result, the margin has also declined. So meanwhile, I think the property investment has also slowed down in 2017, and a further cooling down is expected in 2018. So with that, we think, it's for sure the property sector, we're going to see some smaller players is going to have some stress in the financials. However, it's also an opportunity for the big players to expand. So by saying that, we think there is a divergent trend in the sector, and there will be some consolidations, and that's what we have seen in the past 1 to 2 years.
Very well said, Winnie, and very, very PC answer. So there you go. That's your takeaway trade idea for the day. Many thanks, Winnie.